What's going on, guys? Welcome back to the channel and happy New Year's Eve to you. Cheers to that. Have to drink a beer because it's a celebratory beer. This is going to be the biggest profit day in my trading career, so I'm happy to share that with you guys. So on the day we traded CLSD for 132, AINC for 1800, CAN for 650. RHE for 2,836, red on NCLH $392, green on ACY $32,854, green on HOTH 7,326, green on ELSE for 1,500, green on ORBC for 300, green on MARA for 35, and red on HUSN for 1,346. So actually, first, let's see how many tickers did I trade. That was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Red on 2. So I trade at 72% accuracy across red to green tickers. And so that tops the day with a profit of $45,792 after commission, $44,973 after borrow fees. We'll just call it maybe $43,000 or something. So we're above $40,000 on the day, so it's absolutely crazy. And let's get into this trade recap, shall we? So let's start with the stock. We'll just go top to bottom and go from there. All right, so the first one on the day we'll go over is CLSD. So CLSD was actually a short. If you look at the right side of the screen, you see the blue line? Boom. And basically, we went short on CLSD this morning. Quick short, pretty much short at the top of this, covered into this drop. So was going short on the stock up here and then covered into a low down here. But there's a reason why it's only 138 bucks. I think I didn't get a lot of shares as short, so I had a really small position. Again, I did a lot of trading, so it's kind of hard to remember it all. But nonetheless, if you look at the right side of the screen, you'll see that the stock was overbought on the long-term chart. On the intraday chart, it was overbought, so we recommended it as a short with a target down to that red line you see where it bounced. So that was pretty much our overall target from the highs at 313 down to that level. So it was a short trade that netted 138 bucks. Next one on the list is AINC. AINC was a short. So pre-market, I started shorting in the highs here with AINC and essentially dropped all the way down, and I covered most of the position on this spike back up on the day for a total of 1,800 bucks. So what was the reason for going short on AINC? If you look at the 4-hour chart, the 4-hour chart was running right into long-term trending resistance up here in the highs of 13 bucks. So if you look, we hit 1114 here, or sorry, 1155 was long-term trending resistance. You can see we hit as high as 1140, but markets just couldn't break through 1140. So pre-market, as we were running up, to 1140s, close to the 1150 mark, I decided it was probably, a better risk to reward ratio to be bearish on the stock rather than bullish on the stock. So I ended up going short. AINC catching most of this drop and then covering on this pop pre-market. Next one on the list is CAN. CAN was a short pre-market, pretty much was short here pre-market and covered on this pop. So I was short pre-market from the highs here with about 1,000 shares, maybe like 2,000 at one point, and then faded 1,000 shares all the way down to that drop and covered into that drop on the day with CAN, and that netted 650. What were the reasons for going short CAN when we were shorting? If you look at the right side of the screen, you're going to see this blue line. That blue line is long-term trending resistance. And so, if you look, we were getting really close to the long-term trending resistance. And at the time, pre-market, we were also hitting intraday resistance at that high. So I figured the risk to reward was likely to be down. So I bet bearishly and faded 1,000 shares to that pop, which netted 650 bucks. Next one on the list is RHE. So RHE was a short. Essentially, this stock just squeezed up, got overbought on the intraday chart. It wasn't running into long-term trending resistance, and I'll explain why in just a second. But on the intraday chart, RHE was overbought, so we ended up going short a couple thousand shares here and covered into this first drop here. I think that's what we did. So As a team, we were all short, kind of the high here, RHE, faded it down to this drop and ended up covering, making a total of 650. I don't even know how many shares I had, probably a couple thousand. But the reason it wasn't running into long-term resistance is what I want to explain. All right, so if you look at RHE on the right screen, you'll know that the other day it went through this really big jump all the way to 15. I think it ran on no news. So if we look at maybe like a 5-day chart or something, you can see it ran up this day and then it crashed. And then it popped this day and then it came back down. So today was really just a small little relief bounce from anybody who was short that thought, maybe it could bounce today. So we didn't anticipate that this stock was going to run very big on the day. So as soon as it was overbought on the intraday chart, we decided to go short. And again, as I said, the reason that it's not running into long-term resistance is because the long-term resistance right now, well, it isn't even resistance, it's actually support. Long-term resistance was $3.04. The other day it squeezed all the way to 15 bucks. So now it's crashing all the way down back to what was resistance, and that's why we're getting these bounces down here, because it went way overbought, crashed all the way back down to support. So that's why we got that bounce the other day. That's why we got this bounce today. And normally those bounces are always going to fail. After the big day a stock has and then it crashes, these relief bounce days always get sold into, end up coming back down. So we knew the risk to reward was favorable on the downside after it had squeezed up on the day on RHE, and that netted 2,836. I don't even remember how many shares short I was, but at least a couple thousand. All right, next one on the list is a loser, NCLH, which actually would have been a winner if we did our job a little bit better. So pretty much put it this way, I think I was long 5,000 shares in this dip. Yep, we were long 5,000. Look what happened. Boom. So pretty much I'm the idiot today because we were long 5K down here, and then it just went through this gigantic bounce. So I'll walk you through kind of why I took it off. We started to get long here, added long here. We're looking for breaks over the tops of these candles. It never happened in the immediate. It kind of flushed back down, and I'm like, you know what? Maybe this is actually meant to be bearish on the day. So I ended up taking it off, and then sure enough, it kind of went right back up and went into a long move. There was other traders in the group that went along on this trade and ended up holding and making a really good trade. I unfortunately was the doofus on the day that did not hold the position. Granted, if I would have been a little bit more patient on the entry and didn't size in too heavily, then I probably would have actually stuck on to the trade and made a green trade on this. But first, let's talk about why we would even consider going long down here after it crashes. Look at the right side of the screen. You will see on the right side of the screen, where is the bottom of that candle? We'll see this wick. Where is that bottom of the candle at? On this trend line. Let's put a little level over that trend line. Where does it come into play? Right there. So we knew that there was a good chance this was going to be the bottom on the day as we're running into long-term trending support. But I just failed to do my job correctly and missed out on the trade, unfortunately. And it happens. It is what it is. It's a challenging game, that's for sure. So long-term support, for the time being was at 24.45 for NCLH. So as it crashed down into that level for the first day, we should be going long. And there's a couple other things I could point out. You can see that here the RSI had a divergence to the bull side. So if you look, market's trending down, but the RSI is trending up. That's a signal on momentum that we should go into a bounce. But anyways, that was the reason for picking the entry point, and then also the RSI gave us the indication it should be a long move, and then Connor just doesn't do his job correctly. All right, next one on the day is going to be the big one, which is ACY. But the most interesting one's actually going to be HOTH, where I made 7,300. I almost really screwed myself today, but I'll walk you through everything. All right, so ACY was actually just a phenomenal stock today. Traded it just perfect. So I'll walk you through all the trades. All right, so ACY hits the scanner. It's squeezing up. At the time, intraday, the prices of 1150 were extremely overbought, so I went short 5,000 shares. It instantly drops out. I'm up $5,000, and then it squeezes back up for pretty much no reason. And then I hold the short. I actually add maybe a couple hundred more shares short on this top. So in ACY today, short 5,000, drops out, cover none, squeezes back up, added another couple hundred shares short, let it fade all the way out, and covered this bottom. And then we let it squeeze all the way back up and then started adding short about here in the 13s all the way up into essentially 1540 and down into this dip, anticipating that the market was going to break down. So short 5,000, cover the bottom 5,000 down here, let it run all the way up, had a total of about 8,000 shares short in these highs with an average of 1320. So as soon as the market broke down here, we were going profitable on the trade. So I let 8,000 shares fade all the way out till this bottom covered that bottom. I let the market bounce all the way back up into trending resistance on the day, went short 8,000 shares on this top, let that trade fade all the way out till this candle. This candle you see here, that was me. You see how there's a lot of volume on that candle? There was 60,000, 65,000 shares of volume. I was 8,000 shares of that candle. So let the market fade all the way down. This green candle that squeezed up was me, part of it. I market ordered out pretty much 8,000 shares, and that's all I did with ACY. So short, cover the bottom, bounce up, short, cover the bottom, bounce up, short, cover that bottom. So 3 perfect trades with ACY to net $32,854. Next one on the list is going to be HOTH. Now this is something that could have really got me in trouble, and I would never recommend anybody to probably do this unless you really have a good understanding of the market, which I think I do, but I'm sure I'll have the day where I get smoked and it's going to be a great learning lesson. But anyways, to put it simply, I shorted this whole thing all the way up. I was red $7,000, $8,000 at one point, but I was shorting all the way up, and I accumulated a position of 30,000 shares in here in the high. And then as the market opened, the stock flushed out, and I covered that 30,000 share position to eventually net $7,300. So the risk to reward was so skewed on that trade. And I used an averaging up strategy, which as a beginner, you definitely probably don't want to do exactly what I did. A little bit more experience and you kind of know a little bit about what you're doing, you can do it, but if you're wrong, then you're really screwed. So, imagine if, I was down like $8,000 up here, right? And I'm short 30,000 shares. Imagine if this opened up and then squeezed up a point. Okay, down 37K on the day. Yeah, that would have sucked. But let me explain why I was comfortable holding and shorting, even being down $8,000, and the confidence that the move was going to be down. So if you look at the right side of the screen, you're going to see that the long-term trending resistance existed at 329. So in the morning pre-market, I started shorting. Let me zoom in a little bit differently. So in the morning on HOTH, I started shorting here. I shorted here. I shorted here. I shorted here. I shorted here. I mean, I pretty much shorted the entire move up and got squeezed the whole way. And I kind of knew I was going to get squeezed. Eventually, I already knew, like, this move is just going to go to 320. So to start the day, our overall target on the upside for HOTH in the morning was 330. We said this could go as high as about 330. But it had the potential to reverse here. It had the potential to reverse here. And it for sure very strongly has great potential of reversing in the 330. So the whole way I'm shorting up, I know that we're eventually getting to the big resistance point where the market's just not going to be able to sustain the move. So my objective was to average up my position with big size, and to the point where even though I was wrong the whole way with my account size, and that's the other thing, you have to understand your account size and how to manage your risk and manage your capital. And with the amount of money that I'm working with, I knew that I could leverage up to 30, 40,000 shares the whole way without screwing myself, So I'm wrong shorting all the way up, and then eventually we hit the highs here at 320, and we just see this instant selling pressure. I'm like, you're right, Connor, 330 is the top, but you're a jackass because instead of waiting for the 330, you shorted all the way up. So could have been a way bigger day, but you live and you learn. So to walk you guys through this, it's kind of confusing, but just pretty much put it this way. You look at the right side of the screen, you'll see that blue line up there at 330 is a long-term trending resistance. I did my job incorrectly on the way up. I thought that we had the potential to top here, and there was many moments where I could have took my short off and accepted like a $3,000 loss and then just shorted higher. Like that was always an option too, but I chose the option of averaging up today. Rather than cutting losses, re-entering, I just chose to stick with my trade, follow the plan all the way up to 330, leverage the short at the high of 330. I think I brought my average was 282. That blue line, that was my average. So when I was short 30,000 shares up here in these highs of like 320, that blue line was my average. So the market opens up, we slam down to my average, we pop, and then eventually flush below my average, and I'm into a big trade. But risk to reward on that trade was way off. Would never recommend that most people do that unless you really understand the market and you understand your account size and your capital, and you can understand to manage it, and you can sustain the loss if in the event you lose. So yeah, anyways, part of that got a little lucky today. Part of that is a lot of it's skill, but the Lord was looking out for me a little bit on that one today. So, thanks, sir. All right, next one on the list is ELSC. So ELSC, I actually would have made a lot more money, but I was supposed to go meet my dad to drop off a chair that we got for Christmas for my sister at her office so that she could have that when she comes back to work next week. So anyways, I was supposed to meet him at 1. He calls me, it's like 2. He's like, yo, I'm like, I'm making like 40, 50 grand a day. I can't leave. He's like, well, hurry up. And so I'm like, okay. So anyways, this was my last trade on the day. I went short 6,000 shares here on this candle. As soon as it dropped out, I covered my 6,000 shares, made $1,500. If in the event I would have stuck around, I would have reshorted this candle high and then really made a big win. But what was the reasons for going short on ELSE when we went short on ELSE is if you look at the right side of the screen, you're going to see this blue line right here. That means that's long-term trending resistance. So as the stock squeezed up all the way into the prices of 570, again, you know that it's long-term trending resistance. The risk to reward is more favorable being bearish than it is to be bullish. And so I went short on the top there and netted $1,563. All right, next one on the list is ORBC, which was kind of challenging. I could have done a way better job, but at the time I was managing the 8,000 share short on AYC, and then I entered like a 6,000 share short or something here. But anyways, put it this way, ORBC squeezes up with, at the time, it still looks... So anyways, this stock squeezes up, has no news, so it just blows up, no news. So I go short here, pretty much covered before it dropped because, again, I was managing a couple positions at the same time, so it was a little confusing. And it just wasn't moving in a fluent fashion that I'm usually used to seeing, so I kind of felt a little questionable on this one. And then while having an 8,000 share position on AYC and then like an 8,000 or 6,000 share position on this one, I'm like, yeah, you're kind of dabbling with a lot right now. Let's just take it off. So I didn't catch the full flush. I definitely didn't catch that move, but I ended up making $313 on it. And so the reasons for going short on this one is if you look at the right side of the screen, you're going to see that essentially this stock had squeezed up on the day with no news into long-term trending resistance. It actually broke above the resistance a little bit, but couldn't break this $8 high that it had previously set in from a couple months back. So I figured the risk to reward was more favorable going down and pretty much did a short. It's pretty much the same exact process every single time when I go over it with you guys in trade. Next one on the list was a small winner. MARA, we're just not even going to talk about that. It's just pointless. HUSN is the last one we'll talk about, which was actually a mistake. I should not have lost $1,346. I still should have lost, though. It's not like I probably would have won on this, but I shouldn't have lost as much as I did. Let me explain. So first things first, if you look at the right side of the screen, you're going to see this resistance all the way at 479. And so again, this was a short trade. I couldn't get shares as short, but if I could have, I was going to be betting bearishly. But anyways, market opens. To put it simply, I went long like 12,000 shares here, and then it ends up ripping. So I was right that it was a long, but I was wrong on my timing and my sizing. But really what happened was I tried to go long a couple thousand shares here, and I wanted to have like a 10,000 share position. I did, but I wanted it at the price of like 436. So I start buying a couple thousand shares. It breaks up, and just with the way I enter trades, I clicked a bunch of buy buttons, and then I kind of forgot that I had open pending orders. And then as soon as this candle kind of like ripped down a bit, I got filled like 12,000 shares. And I'm like, I don't want 12,000 shares at that point. I was like, I just basically kind of panicked and let emotion get to me. And I just was like, you know what, screw this, whatever, just cut it out, move on from the day, and I'm sure you'll be fine. So I tried to go long 10,000 shares at a price down here. I only got filled like 4,000 or something like that. Then it squeezed up, and then like I still was clicking and basically put out a bunch of pending orders like with an average here. And then as soon as the candle comes down, I get filled. I'm like, shit, I don't want that many shares, and I want them at that price. And I just knocked the trade off just in case I was wrong. I wouldn't take a nasty loss. So it was just a way of me managing my own risk, taking a loss rather than taking a bigger loss because I had more shares and I wanted to have at a price that I didn't want to have them. And then that's what resulted in a loss of 1,346. So, yep, that is the entire trade recap. So I hope you guys liked the video. Hope you learned something new. Make sure to hit the thumbs up button. Everybody have a happy New Year's. we are having our Christmas, New Year's sale. It's more of a New Year's sale now, I guess would be the appropriate way of saying that. So if you guys are interested, I'm going to leave links in the description below for our course, for our chat room, and any of the custom scripts that you guys see here on these screens that help us trade. Those are all going to be on sale, and I'll leave the links in the description below, and the sales will end on January 1st. So if you watch this video and it's past January 1st, they're not going to work. With that being said, cheers guys, and I'll see you on the next video.